have you learned how to determine the narrative and get the bias? Let's use those tools as well as previous topics to review this recent price action. Okay, so I'm going to talk about the first, what I've shared, being that this, okay, currently here, when price was going higher, this was like the first draw on liquidity. Okay, so this is the first draw liquidity, or at least for why when price was going higher, this was the draw liquidity. Therefore, you had to be buyers when you saw price expanding higher. Okay, the buyers had to be bullish. Okay, and now you will notice that when price is trading to the draw liquidity, it will be expanding in that direction, and PDREs that lead to that level or that area of price, they will be supported, they will be respected, that is. Okay, so in this particular case, we have a bullish order flow, right? And because price is what primarily heading to that drawn liquidity, which is the daily high, so what happened is that the PDREs on that movement of price going higher, on that trend, price going higher, they will support price, they will be respected. Hence, say, so on this particular one, we had this bullish fair value gap here, the price traded into, and continued expansion going higher. Now we already established that when price rebalances the fair value gap, next thing we expect is for price to expand towards liquidity. Now in this particular case, you realize, of course, usually has to be the one that created the one that was created when price trend to the fair value gap. But in this particular case, we have a high time frame draw liquidity, which is the high. So that liquidity pool is the one that price is actually finding support to expand towards. Okay, so let's see how we could have framed a buy setup from the fair value gap to the daily draw. So we move again into the lower time frames. So trying to refine those levels now to levels that we'll be comfortable with trading, and you know that say from the 15 minutes going down, that's like the only time frames we're comfortable taking our entries in. Now we are already, or I have actually, there's a PDF document that I've established that, okay, that price actually did tap into the consequent encroachment of that 4-hour fair value gap. Okay, and inside of that we have this 15-minute order block. So price buys from there to the draw liquidity, which is the high. Okay, so now here it will be, the risk will be minimal as opposed to taking the entry on a high time frame. Okay, maybe with your entry at the either at consequent encroachment, the stop below the low there would not be bad with the target in the high. But that is not really what I wanted to talk about, or what I'm really concerned about right now. So there's something I want to share with you, which is on after price actually took out that high. Okay, but before that, let me actually show you on the 1 hour something. So I like it. I like when price is actually close to draw liquidity, high time frame draw liquidity, and there's a little bit of retracement, right? Especially to the favorite gap, because you understand it. It's definitely gonna support price, and we're gonna see an expansion going on. So these are kind of like one of the easiest trades to get when price is near drawn liquidity. Definitely it will not reverse before that. So if you see an opportunity to enter, see a short little retracement, I always take advantage of those opportunities. And this particular case, you'll see that it was like 1 hour fair value gap, right? So being said, so right here, so what happened is, if you look at it on the 5-minute, you see that it was actually a 5-minute tail swoop right there. The price actually swept this low, then expanded towards the um, the high time frame draw. Okay, well, if you know how to take entries on the turtle soups, this is one of those. Well, anyway, so what actually happened after price took out uh, the high there? Now, let me remind you, okay, on the topic that we dealt with on reversal patterns. Okay, and with reversal patterns, if you remember the stop hand reversal pattern, right? The conditions was that price must sweep liquidity, and then you have a break in market structure, and then price retraces inside this range, that displacement range, and to a level of premium maybe, and sells from there. Now, maybe something that I did not establish is that actually this break in market structure should be this here is not like a break market structure, but actually a market structure shift, right? So I've already done a topic on that as well. Differences between a break market structure and a shift in market structure. Now it's imperative that where price reverses, that this is actually a market structure shift. Okay, only after market structure shift can we have breaks in market structure. Say after price takes out this low, so this will be a market structure shift and then a break in market structure shift, and then on and on it will be breaks in market structure shift until price actually changes direction and has a complete reversal price. Again, you're still expecting to see a market structure shift where that occurs. So does this meet the requirement of this? Well, one, a liquidity sweep, that would be this one right here. Okay, and this, so a market structure shift is actually characterized by a displacement. Okay, now displacement supposes or means that price moves rapidly, leaving imbalances in price. Okay, you're always gonna a displacement. Okay, it's an expansion that always leaves imbalances in price. Okay, see, look at this one here. That's a displacement going down. That's also another word I guess for expansion. Really, every time price expands or in a direction that which usually wishes along the order flow, every time it expands, it usually leaves imbalances in price. We notice that expanding down, prices leaving balances, but going up, which is a shoulder retracements with balanced price ranges or price action actually. So in this particular case, you see that there's actually an imbalance. So that shows that price actually moved right quickly down after taking this high rapidly retreat, went back inside the range. And that's where you have your shift in market structure right there. All right. So we have one going, which is the stop hand. Then we have a market structure shift right there, right? And then what's the next thing that we expect to see is price retracing back inside this range of price, that displacement leg to, in this particular case, will be premium, and setting off from there. Now, what P areas do we have in premium? Well, just above 50%, we have a fair value gap and an order block, right? So let's just mark those out. Mark out your fair value gap and that hourly order block, bearish order block right there. So we have a confirmed reversal pattern, right? With the liquidity sweep, a shift in market structure, a retracement back up inside the range to a period rate. Well, before let me actually quickly go about that. So yeah, we could have price retracing up to a breaker block, okay, or price retracing to a fair value gap, or price retracing to an order block, okay. So anything really. At the time, you'll see what makes the most sense. So again, maybe if you use your discount premium of that range, you'll likely have a more refined level the price is likely gonna be selling at. In this particular case, we have those two, fair value gap and an order block, right? Now, let's try to find that to how we could have actually went about to get an actual entry on that right here on that reversal price after you took out that the daily liquidity pool, which was the daily draw at first. Now switch down to 15-minute time frame. Okay, in the same place. What do you see? Okay, right where we had the favorite gap and OB. Well, I see price creates a high, a low, and a lower high, and that displacement going down. So it is in line with that 1 hour OB. What do we have right there? Well, again, we still just have, if you take your fib, right, still looking at the premium, it's above 50%. We know the first area about the 50% line or that price could reach up to is this mitigation block, and that mitigation block is paired with that fair value gap, which makes it high probability, just like the breaker block with the fair value gap that is high probability audible. So since they so this type of refinement, you see, you are not like reducing the area or the level of price of that high time frame PDRA to, we're not reducing it to a small area, but rather it's still in the same area as the 1 hour order block. So say if you remove that, it's now refined to like a lower time frame period. So this is what it is. We have a 15-minute mitigation block right there, and that is where we had that reversal pattern, and you see price multiple times reached us, went up to that mitigation block once, twice, 3, 4 times, 5, 6, 7, 8 times. We saw price what rejecting of that mitigation block. And where did price sell to? Well, again, to the next draw. If you look at it one more, we had that fair value gap there, right? This is like a discount fair value gap, if I remember. Yeah, in discount. So this is how the current. This is how it is. This is how it looks right there. We get a reversal. The price was pushed down into that the next drawn liquidity, which is internal range liquidity, which is the fair value gap in discount. And what it did was it fell up that entire fair value gap, right? And then a reversal going high. I leave that up to you to go look at each and every time that we had a say a reversal at each of those draws on liquidity. I've actually already outlined the draws on liquidity, and each one I had like a reaction. There's a document, I'll link it in the description. There's a PDF right there that I share all the screenshots and examples and all kinds of entries that could have been taken from all these areas where price see a reaction on. See this high, this further gap, this high as well, slow here, this other block, all that good stuff. And well, I hope this was insightful. Till the next one.